trading lower this afternoon, the worst day for the S&P 500 in 3 weeks.
The question is, what do you miss?
HP's earnings are out in just minutes. Will their results show the PC market is bottoming?
Plus, the peninsula economy, Silicon Valley's explosive growth, is adding jobs at a rate more than double the national average.
And Turkey begins a major offensive in Syria. We speak to BlackRock's Amer Bassad, who says politics in Turkey are more stable than understood.
All right, we begin with our market minutes. This is the worst day for the S&P 500 in 3 weeks. Although having said that, the S&P 500 has not risen or fallen more than 1% in, I believe, now 33 days. Is that right, Matt?
That's right, 33 days. Right now, the range is 0.72% on the S&P. So if we get a little bit of a swing into the close in the last 30 seconds.
It is remarkable that a day when we're down 0.5% is one of the worst days we can remember in a long time.
And in fact, on top of that, it's the lowest level for the S&P 500 since August 4th, led by drug makers. They're the real laggards here.
I mean,
financials did a little bit better, but not by much.
Yeah, if you take a look at Mylan over the last week, obviously a negative publicity has been building for the amount that this company charges for its EpiPen. I believe we have at least 2 people on set here. We have one producer I know for sure of that needs to have an EpiPen around all the time because of food allergies or bee sting allergies. A lot of people have this. If you don't have it, you could die. And so Mylan has been able to raise the price to $600 for a pack of EpiPens. You need to have at least 2 packs, so that's $1,200. Back in 2007, when Mylan first started distributing the EpiPen, it was $57. So they've raised the price quite a bit. Hillary Clinton and Congress want answers. But if you look at drug makers across the board, as Abigail Doolittle was telling us earlier, all of the big ones are down. Allergen, Merck, Amgen, Bristol-Myers Squibb, all or many of these very big, heavily weighted companies on the S&P, and that's why you see a drag.
On the government bond market, let's check out what's going on in South Africa. Here's a chart of the 30-year yield. You want some yield? Here's some, nearly 10% on the South African 30-year. Of course, there's all the ongoing concerns about what's going to happen with the finance minister, whether he's in a dispute with the president, what kind of legal issues he could face. Investors like this finance minister, so any thought that he would be removed or could lose his power, not popular among investors. You see yields shooting up. Meanwhile, yields are also higher in the U.S. today, but on a much smaller, less dramatic scale. Modest ticks higher across the board. 1.56 is the yield on the 10-year.
Well, you talk about risk and reward. Let's talk about the Turkish lira. Plunged in value at about 2 or 3 a.m. Eastern time as word got out that Turkey launched its biggest military operation in Syria to, of course, fight back against ISIS, to push off against the spread of ISIS. The currency did pare its losses after Vice President Joe Biden of the U.S. voiced support for Turkey and its leaders during a visit to Ankara. I also wanted to bring in the Korean won. It led declines in Asian currencies after North Korea launched a ballistic missile. So a lot of geopolitical concerns here. The weakness in the won, of course, today's weakness, that is a relief to the government because, as you can see, over the past 3 months, the won was one of the best performers since the Brexit vote, and that's particularly painful for the nation's exporters when you compare the won to the Japanese yen.
Let's check out oil. It's been swinging back and forth, but it didn't have a very good day. You can see down nearly 2.8% there. You know, it had rallied a little bit earlier in the week on hopes that some of the oil-producing countries would come together, giving some of that back up today. And let's check out gold, which also got hit pretty hard today. Down, you can see early in the morning getting slammed, end up down just about 1.4%. The theme of the day, I would say, between treasuries, yields rising, stocks slipping, and gold down is expectations of tighter policy hitting asset classes across the board.
All right, those are today's market minutes. Let's take a deep dive now into the Bloomberg. You can find all the charts using the function at the bottom of the screen. I'm looking at dollar yen. Everyone's looking at it because it's seen as the most sensitive pair, at least to divergence between the Fed and the BOJ. So this is volatility for dollar yen. What's interesting is that volatility for 1 month, that is your white line there, is now shooting up. It's spiking past the 3-month, which is a blue line. Why is that? Vince Signorella of Bloomberg First Words says that the 1 month captures the BOJ meeting on September 21st. And you can see that spike there on Monday, the first day that BOJ meeting actually fell in line with the calendar. He said there's no need to pay an extra premium for the next 2 months for the 3-month volatility, especially if the BOJ disappoints. the 1 week, which is the purple line right here that I've included, is fairly low, which proves that traders are more concerned about the BOJ meeting than they are about Janet Yellen and Jackson Hole.
I love this. I love time spread charts for exactly that reason, because you can isolate what traders are looking at. I think it'll be fun to look at some of these as we get closer to the election,
Absolutely.
for example, and really see how investors are identifying that risk. I think these are great charts. I mentioned earlier oil swinging, and I saw this great chart from Bloomberg's Dan Murtaugh that I wanted to show. This is all the different bull and bear markets of oil in just the last year. So a year ago, we had a bull market, it rallied 25% in August. Then this big red bar here, we had a 48% plunge through this January. Remember all the panic. Then we had an 88% rally from January to the peak in June. Then we had a 20% bear market from June to early August, and now back in another bull market, 21% from early August. I don't think that's really, you don't see that many different bull and bear markets within 1 year, but it really speaks to how dramatic the swings in oil have been in the last year or two.
Amazing volatility, and
Yeah.
that, of course, you can pin on central bank policy as well. What I'm looking at is year-end forecast for the S&P 500. Very cool chart that I saw Hillary Clark put in our morning note this morning. The consensus forecast is now below where we are. So Wall Street strategists, who typically are more bullish than, any period near the present, are currently bearish at 2146, and we're trading at 2170 and change. The Bank of America Merrill Lynch forecast is down at 2000, so you can see how far below the consensus BAML is. But even more bearish, I believe, is HSBC, which I think is at like 1960. They're outliers on a lot of different calls, so I really find interesting the work that Stephen Major and Dara Mayer are doing, especially in fixed income and currencies, but on equities as well. HSBC is below consensus and below Bank of America Merrill Lynch. So very cool stuff.
All right, we've got some breaking news. HPQ, and of course, this is HP, the hardware side of the business after Hewlett-Packard spun off its computer services side and its software services side. HP reporting revenue beating analyst estimates, $11.93 billion in the quarter that ended versus the $11.46 billion that analysts were expecting. Earnings per share also topping the consensus by 3 cents, 48 cents for EPS from continuing operations. And in terms of the full year outlook, HP basically lowered the upper end of its forecast. It's now looking for only as much as 162 for earnings per share. Previously, it was looking for as much as 165. The printing net revenue was $4.42 billion in the quarter. And the reason I bring that up is because printing accounts for about 80% of profit, according to UBS, and should really be investors' focus because the simplicity, they say, of everyday low printer prices was a good move by the company.
So this is essentially bad bank, right?
Yes.
I mean, HP split into Good Bank, which was the growth side of it, services, software,
higher margin businesses,
and Bad Bank, which was the hardware.
Commoditized
It's interesting. I look at HPQ, and if I use the P-bar chart to compare it to its peers, and then click on the recommendations tab, we can see that out of the 26 analysts that rate HPQ, 15, I think, is it 15 say hold, 11 say buy. So there's still a lot of buys and holds and no sells for what you would expect a bad bank to be. Right?
Interesting.
For more on today's market action, I want to bring in Bloomberg Gadfly stocks columnist Michael Regan. Michael, thank you very much for joining us. What jumped out at you today?
Well, obviously, this trading range we've been stuck in forever, at least the last month, is just holding firm. I mean, a little bit of a sell-off today. But to me, what's really interesting is while we have been stuck in sort of this flat, narrow trading range, there really has been a bit of a rotation going on over the past month into more cyclical industries, technology, financials, industrial companies leading. Not so much your utilities, your consumer staples, your high dividend paying stocks. So to me, it begs the question, is this sort of just a churn? Is it just a rotation from one leadership to another?
And there you
can see it there. Yeah. So
yeah.
that's the last month. Tech, financials, really strong cyclical type of industries in the lead, which has not been the case all year. It's really been the dividend. You know, that chart you showed earlier with the dividend yield on the S&P being higher than a 10-year. That's told the story of this rally all year.
Dude, since 1958, right? S&P 500 dividend yield is the highest it's been relative to the 10-year yield since 1958. That was before, I think, any of us was born. Is that possible? I mean, you and I are the oldest guys.
Well, it's also how it's the lowest the Treasury yield's been since whenever, too. So
that's true, since Gary Schilling was born. Yeah.
But to me, the question is, well, you know, it's sort of the animal instincts, the animal spirits, optimism about the economy, what's driving this rotation.
Right.
So I started, you know, I've been kind of a little bit of a pessimist. I felt like these high valuations were going to make it tough for the market to really keep rallying from here. But I made me curious, is there really sort of something behind this? And there are some things that you can look at and say, yeah, the optimism about the economy is improving. Obviously, one of the things that everyone looks at is the Atlanta Fed's GDP forecast.
And it's shot up recently.
It's shot up, yeah, 3.8% or about 3.6% now. And obviously growth in the second quarter was hamstrung a little bit because of inventories. There was less investments in inventories. So maybe this is a bounce back from that. But it's still, it's pretty surprising to see that sort of strong growth forecast from the Atlanta Fed.
How accurate is the Atlanta Fed's GDP Now index as a predictor of real GDP?
I think it's hit or miss. You know, I think, and the blue chip consensus that we track is less than half of that. So we'll have to see who's right. But it is encouraging to see, you know, that the latest reports coming in being that strong to have that indicator, you know, look that healthy for the current quarter.
Does the Fed have to put, since it's part of the Federal Reserve bank system, do they have to be more optimistic? Because if a Federal Reserve bank was forecasting a recession, that would be almost irresponsible, wouldn't it?
Well, yeah. Well, this thing's based more on the data as it comes in rather than, you know, a central banker making forecasts himself. And it has, at other times in the cycle, it's shown a more pessimistic view.
And of course, we've gotten a lot of home sales data recently, and new home sales, Joe and I always talk about how this is more of an indicator of the overall economy because you're talking about job growth here. I
absolutely agree. I think this report yesterday is fascinating for several reasons. Obviously, it was sort of this breakout month. The home sales jumped 12% to 654,000, highest, I think, since 2007.
Yeah, 9 years.
Yeah, and to me, it is a reason to be very, very optimistic about the economy, not just home builders, but really the overall economy in general. If you look at the home ownership rate, you know, and this is something Donald Trump made a lot of hay out of. It's true. It's fallen to the lowest since 1965.
Millennials go buy homes.
Exactly, and it's all demographics. I mean, I think he tried to blame President Obama, but really, I think you got to look at the demographics. Obviously, I looked up the average first-time home buyer age. 33 years old. And then, ironically, that was the age I bought my first home at. So I'm kind of the average Joe,
nice.
I guess, or the average Mike. You're the average Joe.
All right,
There's nothing average about Joe.
Average Mike Regan of Bloomberg Gadfly, thank you very much. And you can read more of his columns and other fast commentary on the Bloomberg at NIGADF Go.
All right, coming up, emerging market stocks declined the most in 7 weeks, and currencies weakened as political and security concerns resurfaced in South Africa and Turkey. We'll speak to the portfolio manager of BlackRock's Strategic Global Bond Fund next. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Militants attacked the American University of Afghanistan in Kabul today. Officials say at least one person was killed and 18 others wounded. Witnesses say they heard explosions and automatic gunfire.
An explosion happened behind the blind school and they entered the university. Someone just called a guy here and said that some of the wounded victims just died. The security forces should find a way to enter, otherwise everyone will get killed.
Security forces are still searching the campus for the attackers. Today's incident comes 2 weeks after 2 university staff were kidnapped from their car by unknown gunmen. Their whereabouts are still unknown. Italian Prime Minister Matteo Renzi today visited the site of the earthquake and pledged government support for the affected area. Today's quake killed at least 120 people, and rescue crews are still combing through the rubble for survivors. Louisiana officials have issued an emergency order to speed up the removal of flood debris. It allows mattresses, furniture, and carpets to be taken to construction and demolition landfills. The emergency order covers 20 parishes in the flood-ravaged area and ends September 30th. Washington, D.C. has set a record for overseas tourism for 2015 with more than 2 million foreign visitors. China was the country that sent the most tourists, with the United Kingdom second. About 19 million Americans traveled to the nation's capital as well. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet?
All right, thank you so much, Mark. What'd you miss? Turkish stocks slumping the most in 3 weeks as the country launched its biggest military operation in Syria to keep the Islamic State group away from its border. It is not the only developing nation that is retreating, with more political unrest in South Africa. Now, for more on emerging markets, Amir Bisat, portfolio manager of the BlackRock Strategic Global Bond Fund, joins us now. Amir, what I find so interesting here is that in the past 4 to 6 weeks in Turkey, you had a failed coup, you had multiple terrorist attacks, you had downgrades by credit rating agencies, yet Turkish bonds and Turkish stocks, and therefore the lira, all did pretty well. They held up. They were among the top performers because everyone is starved for yield. So at what point do investors look past that and focus on the risks?
Well, I mean, listen, from a valuation perspective, let me start off by saying, from a valuation perspective, Turkey is probably on the stretched side, and at this stage is starting to look, if anything, on the rich side. However, and this is slightly counterintuitive, or at least counter common sense, or counter consensus, is that actually the politics in Turkey is not that bad. That one of the unintended consequences of the coup d'etat is that it actually brought the country together. I mean, it's surprising how much the opposition which has been violently or extremely radically against the president, have actually come with him and have recently been working very closely with him.
So you do think that's an unintended consequence? Because when she said failed coup, I thought, no, Erdogan had the best fake coup I've ever seen. I mean, he has the whole country behind him.
I don't know if it's a fake coup or not, but the result of which seems to have been that it has brought the country together, both the opposition as well as the people on the street, right? And that, I think, is having an impact on the markets. At the same time, when we shouldn't underestimate this, listen, the economy of Turkey is not that bad, right? It's an okay story. It's an economy that knows how to grow. The current account, which has always been their weak spot, has been narrowing very, very sharply. They're actually quite responsible fiscally. Right? As a government, they're very responsible. So you put this together with the politics that has improved, it's not a surprise we've rallied quite a bit.
So you say that, however, the valuation in Turkey may be stretched. What's going to be the driver of Turkish markets going forward? Domestic conditions, valuation, or still just sort of global macro conditions, the Fed, right. China?
At this point, in Turkey and everywhere, we're all hostage to the global story. So that's what is going to dominate. What happens in Jackson Hole, what happens in China, that's what matters. But within the microcosm of Turkey itself, yes, it's going to be the domestic condition. It's going to be particularly what the central bank does. How much does the central bank cut its interest rates? Does it overdo it? Mm-hmm. Right? Do they do the balance just right? The fiscal story is quite important, and also the impact of the coup on the economy. Tourism matters. So within the context of what's happening globally, the story in Turkey is about these things.
Can the domestic central bank make up for something like a slowdown in tourism? I have a chart that shows traders are betting that Turkey's central bank is going to cut rates. Yeah. Will that help or have a big impact on the economy?
I think it will. Domestic demand for credit has been quite weak in Turkey. This is an economy whose inflation is actually dropping, so I think they can afford. They can't afford too much cutting, but a bit of cutting, I'm sort of thinking 1 or twice more they cut yesterday, is perfectly reasonable.
So you mentioned that the political conditions in Turkey aren't that bad. On the flip side, anxiety over the last few days about the political conditions in South Africa. What's your read there?
Oh, no, that one is actually much more intractable. Listen, they had an election, a local election a few weeks ago, the result of which were very uncomfortable for the ruling ANC. It could have gone either way. They could have become much more conciliatory, much more pragmatic, much more moderating, or Zuma, the current president, could have doubled down, and it looks like he's chosen the latter. And by doubling down, he's going after his Minister of Finance, and that, to me, is a dangerous path. The strength of the ministry and the Treasury has always been in its credibility and its autonomy. And that, to me, concerns me a lot.
And the finance minister might be key to everything here, because another former finance minister of South Africa, Manuel Trevor, has made a comment. He reacted to Gordon's being arrested, or possibly being arrested. He says Gordon's arrest could be more damaging than the dismissal of former finance minister Nahanla Nene in December. It could destroy the economy.
Could it be that bad?
Probably dramatic, but nonetheless, an anchor of South Africa's stability has always been the autonomy of the fiscal authorities. If you start playing with that, if you start politicizing it, that's a serious problem for an economy that has its other problems as well.
All right, stay with us, Amir Bassat. Next, we'll show some Bloomberg data and the story that it's telling about the emerging markets.
And a quick check on the shares of HP. They are falling after the printer company and PC company's forecast for the fourth quarter adjusted earnings were below its lowest estimate. This is Bloomberg. I'm Scarlet Fu. What you missed is emerging market stock momentum too fast, too high. Still with us is Amir Bassat, portfolio manager at BlackRock. And Amir, I want to show this chart that Matt had first brought up a couple of days ago. It's so good, and we've updated it because it really shows how some technicals are coming to fruition here. The top panel is the MSCI Emerging Market Index and the price performance there. The bottom panel is the Relative Strength Index. And you can see that every time the RSI gets to this 70 level, the yellow line, it's overbought, and you've seen stocks come down each time. The red vertical lines indicate that. And of course, the most recent time was right here where the yellow circle is, and the emerging market index declined as well. It's been a consistent red light for investors going all the way back to 2012.
How much faith do you put in technicals?
That's a great start. Technician I'm not, and I don't feel very comfortable talking about techniques. Having said that, it's very clear to me that the market, the rally in the last couple of weeks has actually run out of steam. It's very obvious to me the rally in emerging markets has run out of steam. And there's multiple reasons for that, not least of which is we're coming into very important events, Jackson Hole, BOJ, ECB, the American elections. But there's another reason. Enormous amounts of money has come into the asset class in the last 5 months. Right? The market's starting to feel overowned. The market is starting to feel that technically it's not as supportive as before. Having said that, the hard question is, do we think the rally has legs from here after some form of consolidation because of the reasons I just mentioned? And I think the answer is yes. I think the context for EM, despite the bad technicals, is still conducive for further rally from here.
Just to show that flow in one area of the markets, I looked at ETFs on the Bloomberg. You can just type in ETF Go and run any number of searches. I looked at emerging market ETFs, and this covers everything from VWO and EM or equity ETFs. EMB is a fixed income ETF, and you can see year-to-date flows of $4.5 billion into fixed income, $10 billion into equities. So a ton of money came in. It seemed almost like a no-brainer at the beginning of this rally to get into ETFs, and you had all the big banks on the sell side advising clients to do that. Is it also a no-brainer to take some money off the table at this point?
I don't think so. As I was making the point, I think we, as a portfolio managers and the funds that we manage, we're still overweight EM. We're still very comfortable with that position, knowing perfectly well that the technicals at this point are no longer as supportive. But we think the fundamental underpinning for the story, as well as valuations, in a world in which core fixed income is still either offering you no rates or no yield or negative yields, EM stands out as a sore thumb, right? So the combination of a fundamental story that is attractive, a valuation that is particularly attractive, I think we can afford some wobbling before the rally continues afterwards.
So if you had to guesstimate, are we in the 5th inning, the 8th inning?
Third and a half.
Third and a half inning.
No,
right.
I'm exaggerating. It's probably more advanced than that.
Amir Basad of BlackRock, thank you very much.
Coming up, we hear from Palo Alto's former planning commissioner and how she ended up on the front lines of Silicon Valley's housing wars. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Central Italy is digging out from a deadly earthquake. The 6.8 tremor flattened small towns and left at least 120 people dead. Rescue crews are trying to find survivors and victims trapped in collapsed buildings. A powerful earthquake also shook Myanmar early today, leaving 3 people dead and damaging nearly 100 ancient Buddhist pagodas. The temples were in the former capital of Bagan, a major tourist site. The powerful earthquake had a preliminary magnitude of 6.8. Donald Trump's again urging African Americans and Hispanics living in inner cities to give him a chance. Speaking in Tampa, Florida, Trump said that Democratic policies have only led to more poverty, crime, and joblessness in cities like Chicago and Baltimore.
The Democratic Party has run, as I've said, nearly every inner city in this country for 50 or 60 or in some cases over 100 years. Over 100 years. They produced only more poverty, only more crime, only more joblessness, and broken homes all over the place at record levels.
Polls show that minority voters overwhelmingly favor the Democratic nominee Hillary Clinton. Her former rival Bernie Sanders says he'll campaign actively to send her to the White House. Sanders says he'll urge the supporters of his former presidential campaign to help Democrats take back a majority in the Senate. Sanders says he's leaning towards seeking re-election as an independent from Vermont in 2018. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet, back to you.
All right. Thanks so much, Mark. Let's get a recap of today's market action. Not a whole lot of declines to speak of, but it was a lower day for U.S. stocks. And for that, it was the worst decline, I believe, in 3 weeks for the S&P, even though it was only off by 0.5%. And that kind of gives you a snapshot of the market action over the past couple of weeks.
Right. Also today, we saw a sell-off in Treasuries, yields ticking up a little bit, saw a sell-off in oil, saw a sell-off in gold. Common theme between that and the stock market seems like some expectations of tighter Fed policy bringing everything down a little bit.
And a quick check on a couple of names that are moving in after hours trading. HPQ, which is the ticker for HP Inc., the printer business, the PC business of the company. You can see it's down by 4.9% after coming up with a quarterly forecast, profit forecast, I should say, that falls short of analyst estimates. Guess Jeans, or it's just called Guess now, I just think of it as jeans because that's what I used to wear, rose 13% in after hours trading. It had plunged initially and then shot up. Its revenue missed for the previous quarter, but it did raise its forecast, so that sent the stock soaring.
What'd you miss? There's a lack of affordable housing in Palo Alto, and it's driving residents away. Our next guest says the San Francisco Bay Area community, known for tech, has the worst housing policy in the U.S. Kate Vershoff-Downing is co-founder of Palo Alto Forward and a former commissioner of the Palo Alto Planning and Transportation Commission. Kate, thank you very much for joining us. You recently resigned and you decided to leave Palo Alto because of your $6,200 a month shared rent. What is the problem in the city with housing, and why is the city unwilling, in your view, to address it?
So our problem with housing is that we have systematically added far more jobs than housing for decades. We have the largest jobs housing imbalance in the nation, with 3 jobs to every housing unit in Palo Alto. Because of both of our jobs housing imbalance and the regional housing shortage in the Bay Area, housing prices continue just to spiral out of control.
And of course, what I found fascinating in all of this is the Palo Alto mayor's comments. Here's what he said. Patrick Burt saying, we're looking to increase the rate of housing growth, but decrease the rate of job growth. This doesn't mean we want no job growth, and it doesn't mean we want reckless job growth. We want metered job growth and metered housing growth in places where it will have the least impact on things like our transit infrastructure.
Kate, is that a reasonable point, that even if you were to add more housing in Palo Alto, that there would still be, then that would create this huge stress on the transportation infrastructure and the problem would show up a different way?
Well, I think you need to do both. I mean, I think you need to add more housing, and we also need to invest in public transportation. The two have to go hand in hand.
It is odd to hear a mayor kind of suggest that he wants to limit job growth in the economy that he runs. I don't think I've ever heard any other politician say that he wants to hold job growth back. On the other hand, I could understand why you wouldn't want to put any more stress on the infrastructure. I mean, is traffic very heavy? Would it even be possible to get around if you added more housing?
I think it's possible, but I think it takes smart planning and it takes a desire to make those plans, right? I mean, you look at the city of Palo Alto, you look at who's on our city council. It's all people who are either independently wealthy and don't need to work or people who are retired. I mean, we have a mayor who bought a house for less than $500,000 and it's now worth $4 million, right? These are people that have no interest in seeing more jobs because it doesn't personally affect them. They don't need jobs anymore. They're rich enough.
This is the exact point I wanted to ask you about. I wanted to, if you could, I mean, from your time on the Planning Commission, talk to us about what is their motivation for the lack of housing. Is it just, in your view, personal interest, the fact that their real estate values have surged, or is there talk about preserving the state of the community and not changing much? Does that hold water? What's your view about their real motivations here?
Well, I think there are two. I think the first one is, as you've outlined, you know, there's an interest in keeping up the housing shortage because it props up people's housing prices. You know, and you've seen people in Palo Alto who bought houses for $100,000. They're now worth more than $4 million, right? And that's all money that, you know, it's just a windfall for them. They didn't earn that money. They just happened to buy into a lucky market, and then, you know, they enacted the policies that keep the housing shortage going, which keep the prices high. As for whether or not, you know, we can do something about it, definitely. I mean, most of Palo Alto is still 1- or 2-story structures, right? We still have lots of empty parking lots. We still have lots of ugly strip malls. There are places for us to grow, and there are places for us to go near existing public transit that would allow us to grow in a way that would have the least harmful impacts on our community. But I think that, you know, I think number one, people are doing it because it props up their housing prices. But number two, I think they're doing it because they want to keep living in a suburb. You know, they bought into a white. Yeah, go ahead.
Well, I mean, is that okay? Is it okay, Kate? Do you think it's fair for a community to collectively say, we don't want to get any bigger, we don't want to increase our population, we don't want to live in a more dense area?
I think it's fair for a community that's not a job center. I think it's fair for a community like Beverly Hills. I don't think it's fair for a community that has purposely invited lots and lots of Fortune 500 companies to establish corporations headquarters in their cities, and then to say, we will take all of your tax revenues, but we will not do anything to house your workers.
Here's some pushback from someone who's lived in places like California and New York, another city that has seen expensive housing. Connor Sen, who's a Bloomberg View contributor, writes, most cities don't have a shortage of housing, just a shortage of housing in the neighborhoods where wealthy young people want to live. Policies that constrain development in the more developed parts of cities can facilitate development in less developed neighborhoods. In other words, the tens of thousands of people who leave New York and California every year, Joe and Matt, can act as sources of new demand in the places to which they move, whether it's Florida, Texas, or Colorado.
Right. Is it possible that Palo Alto's refusal, in your view, to build more housing is a de facto subsidy, help other areas grow that need that kind of growth and population inflow?
Well, I wouldn't see it as a subsidy. I would see it as a cost. I mean, places like Silicon Valley, you know, we're a tech hub, and that's not, you know, that's not an accident of history. We are a tech hub because it makes sense to locate where there's a huge talent pool. It makes sense to locate next to a research university. It makes sense to locate next to investors. When people end up being pushed out to areas that are not hubs in that way, it's far more expensive for companies to set up shop there. It's far more expensive for them to grow there, for them to find investors, much harder for them to find employees. So when you push out people and consequently you push out companies away from that economic ecosystem that makes them thrive, every one of those companies is that much harder to start. So that means that it's harder to start new companies, and it also means that it's harder to add more jobs to our economy.
Okay, real quickly, do you have any optimism that anywhere in the Bay Area things are going to improve, or is your view that this fight will go on forever without any sort of meaningful change?
I think that the only meaningful change that we can really hope for is at the state and the federal level. I think that every city, when left to its own devices, will continue adding more jobs because it helps their tax revenues, and they will continue saying no to more housing.
All right, Kate Vershoff-Downing, co-founder of Palo Alto Forward. Thank you very much. Fascinating story. Really appreciate your perspective on this.
Coming up, former UK Independence Party leader Nigel Farage says he will appear on stage tonight at a rally with Republican presidential nominee Donald Trump. We examine Brexit and the Trump connection. This is Bloomberg. Shares of GameStop have jumped this summer, rising more than 20% since mid-June. Now, some people thought the video game retailer would go the way of Blockbuster, becoming extinct in the digital age. But the numbers help to tell a different story. In today's The Numbers Don't Lie. A big reason for that is Pokemon Go. Online domestic sales for Pokemon-branded merchandise, whether it's clothing, toys, or electronics, soared in July. GameStop is capitalizing on that craze, with more than 400 of its stores earmarked as Pokestops. The CEO says sales were higher in those locations. Of course, Pokemon is not a console game, which is still at the core of GameStop's business. With Sony, Microsoft, and Nintendo getting ready to release the new PlayStation or Xbox, look for a pickup in the number of developers working on console games. Strong consumer interest in virtual reality also helps GameStop sell headsets. Now, in the meantime, GameStop is offsetting a decline in new video game sales, and that's the 29% drop last quarter, by diversifying. This other category there, that includes GameStop's technology brands unit, which is now AT&T's largest authorized retailer with more than 1,400 stores. GameStop has managed to avoid consecutive quarters of comparable sales declines, but that may change this quarter. The company anticipates same-store sales fell between 4% and 7% in the 3 months ended in July. Not everyone believes that new consoles, virtual reality, and a connection to AT&T could turn the tide. GameStop was the most shorted stock in the S&P 500 last year, and it was even taken out of the benchmark index. It remains one of the most shorted stocks on the New York Stock Exchange. We'll be watching for how these trends play out when the results come out after the U.S. closing bell on Thursday. Matt?
What'd you miss? At a rally in Tampa, Florida, Donald Trump slammed Hillary Clinton for the controversy surrounding her family's charitable foundation. The GOP nominee accused the former Secretary of State of covering up a vast pay-for-play scheme.
We're going to end government corruption. Hillary Clinton ran the State Department like a failed leader in a third world country. She sold favors, she sold access, and wait till you see when it's revealed all of those people. Now it looks like it's 50% of the people that saw her had to make contributions to the Clinton Foundation.
Joining us with more is Bloomberg's Margaret Talev in Washington. Margaret, Donald Trump is going to end government corruption. That's a weight off my chest. How's the Clinton campaign reacting to this?
The Clinton campaign, after taking its time to kind of get its statement together, and they probably missed some opportunities in the last 24 hours, came out with a very strong statement saying that the story that Donald Trump is referring to, the one that alleges that half of her meetings as Secretary of State were with foundation donors, relies on utterly flawed data and cherry picks from a limited subset of information about her meetings. And the Clinton campaign has gone on to say that she met with, close to 2,000 folks who were in some way connected with various foreign governments, and that those numbers were not counted as part of the AP's report. Also, others defending the Clinton Foundation, saying that the foundation has actually thousands of donors and only several dozen of them got meetings with her when she was Secretary of State. So they are pushing back against it. But, the problem is that a lot of her problems with trust and credibility and kind of voters' gut feelings about this very nebulous thing are already kind of baked in the cake. And what Donald Trump is hoping to be able to do is just kind of take advantage of that and let voters get lost in the details. We don't really understand the details, but here's another reason, not to trust her.
Yeah, I want to ask about exactly that. There's it sounds like this hope that voters may get lost in the details. When you do look at the details, is there anything that she did that actually looks like pay to play?
So there are thousands more emails that the State Department is combing over, and many of which will be released between now and November. But this sort of initial batch, most recently loosened up by the pressing, both by the Associated Press and by Judicial Watch, shows certainly the appearance of access. If you were very active with the Clinton Foundation, then there were top-level Clinton aides connected both with the foundation and the State Department talking to each other saying, hey, maybe this person would like to meet with her. But did that access actually translate into favors, or is that kind of old Washington standby that a lot of the reason why donors give is just to have an ear to be able to get their foot in the door or have some time in front. Not that either one of them is great. Not that you'd run a campaign saying, hey,
No, you made this point, though, Margaret, yesterday. I think it's a very important point. There's a difference between access. Okay, if you give the Clinton Foundation $1 million, you get a free trip to the State Department, and actual favors, which would be the ethical problem. There's not really an ethical problem with getting to go and meet the Secretary of State, is there?
Well, that's exactly right. But the problem for Hillary Clinton is that every minute that she and her campaign either spend defending this or spend trying to decide whether to defend it or whether that will draw more attention to them is a minute that they don't control the narrative and that they're not going after Donald Trump. So Trump, who has faced so much controversy for his statements about immigrants, women, what have you, whether his policy on immigration is flip-flopping, the heat is off of him as long as he can keep talking about this, and that's what he's counting on.
All right, and of course, speaking of Trump and controversy, what other kind is there? Let's talk about Nigel Farage. He's going to be visiting a Trump rally in Mississippi. He, of course, is the leader of the UK Independence Party that pushed for a Brexit and ultimately got what it wanted. Should we expect an endorsement from Mr. Farage?
Yeah, it's really interesting. Our expectation at this point is no, that he would stop short of an endorsement. He has said himself something to the effect of, I'm not going to get caught in that trap, but also telling a local station in Mississippi that you couldn't pay him to vote for Hillary Clinton, which is good because he probably shouldn't be casting votes or taking money to cast votes. Anyway, interesting that we know about the story because Farage himself is the one making this point to the local stations, not the Trump campaign. Some early confusion, even from the Trump campaign, about whether it was happening and whether they would appear together. So we'll see more in the hours to come.
I'm looking forward to watching that. Bloomberg's Margaret Talev in Washington. Thank you very much.
Thanks, guys.
Still ahead, shoppers in Hong Kong were waiting for up to 2 hours in line for Nutella, personalized jar of Nutella. How does this help slumping retail sales in the city? That conversation. This is Bloomberg. I'm Scarlet Fu. What you missed, waiting for 2 hours for customized jars of Nutella is helping to cushion Hong Kong's retail slump. Well, we know that retail sales in Hong Kong have been falling for 16 straight months, so pop-up stores in major malls are aiming to bring back foot traffic. And the allure of a Nutella jar with your name on it, even if it costs $10 US, are the kinds of tactics that are attracting customers. Joining us now with more is Bloomberg Daybreak Asia co-host Betty Liu. And of course, Betty used to live in Hong Kong. I used to live in Hong Kong. When fads take off in that city, they take off.
They really do. Panic and that feeling of missing out, that FOMO, right, spreads really quickly in that harbor city of Hong Kong. And so, as you mentioned, pop-up stores have become an interesting way for retailers in Hong Kong to generate that sort of fear of missing out and generate sales to match. So Nutella at Pacific Place Mall is a great example of that. But Nike and other brands have started to do this, brands that might not have done that before because sales have slumped, as you mentioned, for 16 straight months. We're familiar here in the U.S. with pop-up stores, but that's not a really that's not a concept in Hong Kong or parts of Asia. So this is just becoming something new.
And that's because malls like Pacific Place or Times Square or IFC, they're all stocked with Louis Vuitton, Prada, and those other luxury name brand stores.
A pop-up Louis Vuitton store.
But the problem is that falling mainland tourist numbers into Hong Kong have made it so that a lot of those stores have closed up their branches, and so you have a lot of vacancies in all these Tony malls.
You do. I mean, interestingly enough, the malls actually have done better than the streets. You know, the stores that are on the Hong Kong streets. But still, they're suffering all around. So as you say, you hit the nail on the head. Chinese tourists. At the end of June, 3.2 million. So that's been a significant decline. Retail sales have been down about 11% so far in the first half of the year. So these Chinese mainlanders who do like luxury brands and they buy them have been missing from the economy.
Yeah, if we go into a terminal, I just made this chart that sort of shows the issue. The white line of the terminal is yuan versus Hong Kong dollar, and of course the Hong Kong dollar is pegged to the US dollar.
Correct.
So there's been a big plunge in, Hong Kong has gotten a lot more expensive, whereas the blue line, the yuan versus the euro, is not fallen by nearly as much. And so, if you have a big ticket splurge for going on a big luxury shopping trip, it might make more sense to go to Europe than to go to Hong Kong if you're going to spend a lot of money.
Well, and we did see that after Brexit happened, the number of Chinese clicking online to their version of Expedia, it surged because they were all thinking, oh my goodness, I can go to Europe now, I can go to the UK and buy goods for 20% cheaper.
But when I saw this Nutella story, the first thing I thought of was, of course this is in Hong Kong because fear of missing out drives so much. I mean, there are bank runs or bakery runs or
what do you call it? Kiasu?
Kiasu, yeah, kiasu is fear of missing out. Pa shu literally means fear of losing. And that drives a lot of the behavior in major dense cities like Hong Kong. I mean, Betty, you lived in Hong Kong. Remember when bakeries would face a run on coupons or people redeeming their coupons because they thought the bakery was going to close and therefore they had to redeem them right away?
Well, my favorite story, though, was Portuguese egg tarts. I don't know if you guys have ever had them.
The best.
They're fantastic. But I just remember that people would line up like around blocks to get their hands on these Portuguese tarts because they were like a special. They were a special from this bakery. By the way, we also have that fear here. I would just like to say, cronuts. Anyone remember cronuts? Right?
I have heard of cronuts, but I don't think it's the same. I think we hear a lot more about these fads taking off and gaining so much steam and then just dropping in Hong Kong or in China
and you
or
don't
Japan.
think cupcakes. That's one word, cupcakes. Come on, man.
I'm not a fan. I like a whole cake. A whole cake. All
right, thanks, Betty. You can catch Betty with the Von Man at 7 p.m. New York time and 7 a.m. Hong Kong time for Bloomberg Daybreak Asia, which you can always watch on the Bloomberg.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg. this. Japan PPI sources tonight at 7:50 p.m. Eastern Time.
And don't miss this. Spain's PPI and GDP coming out at 3 a.m. Set your alarm, special for that.
And at 8:30 a.m., U.S. durable goods and initial jobless claims.
Your desert island indicator.
Yes.